Hello and welcome to It's the Economy. We continue our analysis of how the 27% tariff imposition on Indian exports to the US will impact the economy. Just to remind you, it is zero tariffs on pharmaceuticals, on copper and on some energy products and semiconductors. We do import some, export some energy products as well to the US. It is 25% on automobiles. That doesn't change. That's the global, and of course on steel and aluminium. And the 27% India-specific number impacts all the other exports. Joining us to discuss what the impact on Indian economy, Indian agriculture and trade are two experts: Ashok Gulati, distinguished professor at the Indian Council for Research on International Economic Relations, ICRIER actually, and former chairman of the Agricultural Prices Commission, I guess the best agri-economist we have. Also joining us is Mr. Ajay Srivastava, the acknowledged global trade expert. He heads GTRI, the Global Trade Research Initiative. Gentlemen, thank you very much for your time. We do need sector-specific experts now. Dr. Gulati, first to you, sir. Our agri-exports, mainly I understand from the numbers, is basmati rice and shrimps to the US. These are seriously impacted, you think, because of the 27%?
27 or 26%?
So no, it is 27. Apparently, Trump said 26, but in the annex, it is 27, and actually it was Mr. Srivastava who pointed that out.
Anyway, you know, looking at the tariffs on Indian products in isolation is not the right way to look at it. If you are looking at, let's say, rice, now rice tariff going all the way up to 27%, what are the options? Will they stop eating rice, or will they import from other countries? Which are the other countries? That's Vietnam or Thailand. Their tariff structures are even higher than ours. So in fact, we could be a gainer because we will get this tariff advantage vis-a-vis our closest competitors, Thailand and Vietnam, as far as rice is concerned. Okay. So to analyze commodity by commodity or sector by sector, you have not to look at just your tariffs, but the tariffs of the competing nations who are supplying the same product to US.
Actually, the competitors list will run, sir. We have the Southeast Asian, data as well. And as you pointed out, Bangladesh, Thailand, Vietnam are all going to suffer slightly higher tariffs than ours, between 2 and 10% more than us. But Mr. Srivastava, first thoughts from you. How would you take the impact? Will our exporters take some of the impact and keep some of the prices higher, because that's what the competition from Vietnam and Thailand will do?
So I agree with Ashok ji that it's basically relative disadvantage that is at work right now in today's scenario. And we see many of our products will be hit. For example, marine products will be hit, and our auto components will be hit because they will be supplied maximum from Mexico at zero tariff into US markets. So, but electronics will be hit because our value addition is very less, and it can barely absorb 27% tariff hike. So countries like China, where most of the supply chains are concentrated, they despite higher tariffs, it will be difficult to dislodge China from electronics. So these are my initial thoughts.
Okay, so your initial guess is that auto parts will be impacted because a lot of it is coming from Mexico, and there is no tariff. So auto components could be impacted, right?
Yes.
And electronics, China will be better able to weather, and therefore we may lose out.
Because our value addition in electronics is at 10 to 15%, not even that in many of the advanced products, whereas most of the supply chains are concentrated in China. They were dispersed earlier, but in the past 10 years, they are concentrating. For example, Apple supply chain, basically it's located in 1 or 2 cities. Everybody is together. So it's difficult to dislodge them.
Okay, fair enough. But even auto parts, actually, Samavardhana Madasan told us that their factories are in Mexico. So probably even there we have to get a little granular. Dr. Gulati, according to you, which are the sectors where we may not be able to pass on? For instance, textiles. Do you think Vietnam or Bangladesh, for instance, will be better able to absorb part of the shock and pass on less and therefore outbeat us or something like that?
No, in fact, that's where our largest benefit is likely to be.
Oh,
Because
textiles.
textiles, if you look at the last 10 to 15 years, Bangladesh has captured the global markets and the US markets much faster than what India has been able to do. Same story is with Vietnam, although China has been vacating some space. But what is going to happen, because Vietnam tariffs are going to be much, much higher than ours. Even Bangladesh is at, I think, 37%, right? And China at 34%. So all the three major competitors on garment exports, apparel exports of India are at 34, 37, and perhaps Vietnam is at 45 or 47%. So we are going to get a big advantage in that in terms of relative incentive structures. So on textile, I feel we will be the gainers.
So that's very big. In fact, Gokuldas exports at the moment is up 7%. So clearly the market has zeroed in on what you are saying.
That's right.
Mr. Srivastava, any other sectoral detail that you can give us? You said auto components you would worry a bit, and electronics, as you say, you would worry a bit. Anything more you can add in terms of nuances? Mr. Srivastava, I mean, textiles, for instance, you agree we will be at an advantage?
Yes, because textile, the nuance is that in, say, cotton textiles and even in synthetic textiles, labor component is 30 to 40%. And if China suffers 54% tariffs, textile is not a very high-tech item. Labor component will dominate, and compared to India's 27%, 54% on a low technology item, it will give immense opportunities for India or even global manufacturers to relocate to India. But the problem is the uncertainty, unpredictability. Trump says India charges 54% tariffs, and he just halved it to 27%. When he raises 27% to 37 and then 54%, nobody knows. So if I am an investor, I am seeing that China tariffs are high, India low, India is a good possible location for me. I'll still have to figure out whether Trump will stay with these tariffs or after a month, he will get angry at some country and then revise it to full value, say 54%. I think that's the reason they are using two values. So that uncertainty has to be worked out at the investor level. Right now, it's not clear.
Very, very pointed, issue, sir. Dr. Gulati, therefore, a general equilibrium analysis is called for. Nothing can be ceteris paribus at this point in time. So what would your sense be? There have been economists telling us that they're expecting a 1% fall in global GDP because of the factors you both are saying. Uncertainty. No one will want to invest. Can you give us some general equilibrium impact on global, US and on India?
Well, that's a big question. And looking at 2-3 things with the increase in tariffs, how much inflation is going to be there in the US economy, and will the demand shrink there? That's one question. Now, for a particular commodity, it may be very minuscule proportion of their total expenditure, but when you look at all the commodities and if their prices go up by 26% or 28% or 30%, depending upon which country it is coming from, then there is likely to be some impact on the demand reorientation or even compression. Now, that demand compression of the largest economy in the world, the consumer economy in the world, can send signals around the world to slow down their production. So on top of this uncertainty about tariffs, I'm worried about whether the demand compression will be there, and that will slow down the growth process. But my feeling is, frankly, it will take 3 to 6 months to know and stabilize the system, which direction different countries are going to move, and whether there is a possibility of renegotiation on different things. I think this is the first shot, literally a 440 volts
Yes.
shock that President Trump has given to the entire world to reset. Looking at it from his angle and America first angle, uh, trade deficit of $1.2 trillion, and which is increasing over the last 5 years, is very unsustainable.
Yes.
So all said and done, I think he's correcting the entire world trade order. But the way he has calculated these, that is a mystery a bit, because how much is the tariff? He says, oh, India is applying 52% tariff on us. And he says it's a tariff plus non-tariff barriers plus.
So we worked out that formula. Apparently, it is how much we export to the US, that is how much they pay us, divided by how much they export to us. And the difference is 52%. And he halves that and imposes 27 on us. It's an import-export calculation.
It's not a currency manipulation. It's not what is written in the text.
No. He takes all that
and that's not. It is a very...
Apparently he assumes that the trade deficit reflects everything. It reflects our currency manipulation. It reflects our non-tariff barrier. So it is the deficit. That is the key number, according to the initial comments we are getting. Very quickly, sir, is there a financial sector impact? I want quickly both of you to comment on that. Dr. Gulati first. Financial sector impact in the sense that investments to EMs may not come by the FPIs.
Of course. The financial sector, the bankers have to look at the risk, and risk is enhanced. Which sectors to give? Which sectors are going to compress and which sectors are likely to expand? So each bank will have to literally work what is likely to be the unfolding scenario. Okay. And I would say they will go slow and steady and perhaps at a standstill in giving more and more of loans on that. So there is likely to be some sort of a, lull in the loan activity, in the investment activity, and that's going to impact the overall growth process.
Yes. Mr. Srivastava, last word, out of time. What is the impact on rupee, you think?
So I can only, at this point of time, I'll say that because of the tariffs, US consumers will have to shell out more money. That will lead to more inflation. More inflation means interest rates. They have to jack up interest rate. That means FPIs will be withdrawing money from world over. That means stock markets world over will feel duress. And then the related impacts, we all know what's going to happen.
Yeah.
So unpredictability is the basic factor. Yeah.
Yep, I take your point, sir. Thank you very much. As Dr. Gulati also said, it's going to take 3 to 6 months, provided President Trump doesn't change his mind, even after those 3 and 6 months. Prolonged period of uncertainty, but there is going to be an impact, not just on the trade channel, but also because of the economic channel, financial channel, and confidence channel, is what our experts tell us. So there is a negative impact, but immediately do not run away sector specific. It's possible that textiles, pharmaceuticals are all going to be advantaged because our competition is being hit even harder. We wrap up on Bazaar on that note. Thank you very much, Dr. Gulati and Mr. Srivastava. We'll continue our analysis after the break.